What is the internal rate of return? It is the actual return generated by the project over its useful life. If the cash flows of the project are differential, then you can calculate internal rate of return using trial and error method. And if you have uniform cash flows, that is annuity, then through a simple formula you can calculate this internal rate of return. And if you are going to discount the cash flows using internal rate of return, and if you arrive at NPV, then your NPV will be 0. The message is at IRR, NPV is going to be 0. Okay, how you will take a decision using internal rate of return? For that, you have to compare it with cost of capital. If internal rate of return is greater than cost of capital, then you can select that project. If it is less than cost of capital, then you can reject the project. And if it is equal to cost of capital, then it's an indifference point. You can take your own decision.